We're going to talk about a sector about which we spoke a lot just after COVID, and it is the travel and accommodation booking sector, I think. No?
Yeah.
What's the name for it? Travel and leisure.
Yeah, there's a subsector of that because you have also Marriott, but this is the booking sites.
Correct.
And there are only two players in the market.
Yeah, well, there are more, but the main players are, in this case, Booking and Airbnb. And why we're talking about these two, because Airbnb presented its quarterly figures this week.
Yeah, and they're both listed. And if you look at the market shares, Booking has a market share of around 1/3, 34%, and Airbnb not slightly lower, a little bit lower, more than a little bit lower, 25%.
Yeah.
But then the number 3, I've never heard of it, with 7.6%, Hopper.
Yeah.
And then Expedia, Hotels.com, Traviago, and some small ones.
Trivago.
Trivago, yeah. So investors always like when a player is on
Moat, no? Is a main player in the market.
Yeah, like ASML. A lot of people invest in ASML. They're chip producers, but they don't hardly have any competitors.
No.
So in this case, they also don't have hardly any competitors. The question is, do you see that coming back in the prices, and do you see that coming back in the outlook, in the figures, etc.?
Yeah.
Because they're market leaders together. So Airbnb came with figures. When was it, Martin?
The figures came out on 14th of February, and we thought they were not so good, but the market, thought differently about it, because the stock price went up to 157.50 from the day before 144 something, so almost with 10%. At the moment, it's trading approximately 6% pre-figure, 6% higher than pre-figures. So the market liked what they presented. You have some inside data on the fundamentals, and then I'll come back with some generic outlook figures on both of the companies.
Yeah, and you said before it's quite a positive earnings season, eh?
It is, yes. Everything is positive. Mainly also driven because of the sentiment with Nvidia and Meta, and of course, and Microsoft. And what you said also, I think was correct this week in the office, that clients, or not clients, but also investors in general, are not selling, but are buying. They push the market higher. So you might also have that people buy, okay, I buy a little bit more of this ETF, and then automatically, these stocks are in that, of course, they go with it.
Yeah, so they missed the earnings per share with 70 cents. And normally that's a sign that it's less than expected, and normally prices drop.
Correct.
The revenues, they grew from year to year with 18%. Okay, you can say that's good. But if you look at the year before, it was a growth of 40%, and the year before that, it was, after COVID, 77%. But what you see is that the growth is going backwards. It's quite fast. If you look at the cost went up with 27%, and the year before they went up with 19%. So the costs are increasing. And if you look at the net income, they had a problem because they had to pay a fine in Italy, and that fine cost them, or it was not a fine, it was a settlement that cost them 620 million.
That's a lot of money, eh?
Yeah, and that's why they ended up with a loss of $350 million.
Well, tax claim, no? It had to make the taxes.
They made a deal. So I think they're not good figures. And
well, maybe they put those 620 million in the cost, eh?
Yeah.
So that's a one-off cost if you really use that.
No, but if you see here, if the net income was the same as the year before, if you take it out.
Okay. So no growth.
Yeah, and if you look at those companies, and with those companies I mean also like Netflix, people are looking about the growth of new subscribers, and it's also with Airbnb. How many new nights are booked? Because that's the underlying figure, and of course, then you can start talking about margin and cost, etc. And then you see that's also declining. Nights and experiences, that's how they call it, year to year booked, dropped from 56% in 2021 to 31 and 14 over the last year. That's all. It's not too positive.
Absolutely not.
They are planning to grow in different places, and also they mentioned the Netherlands, but the Netherlands is like a lot of countries is they have in a lot of cities, the main important cities bans on the amount of nights that you can rent out of your apartment. I think in Amsterdam, for example, it's 30 days. And that I think is a big pressure.
Per month.
Per month.
That's every day.
30 days a year.
Okay.
30 days a year, so you can only rent it out for 1 month.
Okay.
But you also see it happening in Barcelona. And that I think I didn't see it in the notes that we saw, but I think that is
it's going to be the disaster of Europe. All these rules.
Yeah, I think, but that is a big pressure for Airbnb, and Booking doesn't have that. They also rent. You can also book an apartment through Booking, but mainly, and that's where they're coming from. It's hotels.
Hotel sector, yeah.
So I think from that to keep that in mind, I think Booking has a much more positive outlook than Airbnb. And also, if you look at macro economy, if something happens, if there's a backlash, this is a sector that will face directly the negative impact of it, because the first thing that people not do is to book that extra weekend to Barcelona, for example.
They postpone those things, absolutely.
So there are early cycles, and so I think people should be careful, especially with Airbnb, but to compare them.
Yeah, if you look at it from
chart side,
definitely Booking was the better investment over the past 4 or 5 years. The price of Booking and compared to Airbnb is $50. You would have almost. If I compare this here, it would have been about 25% more return on Booking. Looking from a fundamental side of what the analysts think, well, both of them are very close to their target price. The question is always how much is a target price worth? A target price of Airbnb is at 143 and at the moment it's trading at 153, so it's $10 above that. So you would say, well, you stay away from that. Looking at Booking.com, they have a target price of 3,757. It's really expensive stock, by the way. Unit price of $3,740 at the moment. So a little bit of potential there, but not name worthy. Price earnings. The sector is the industry which we are talking about is averaging 23, so 23 times the earnings. Booking is at 26 and Airbnb is at 21, so they're slightly below the average.
Yeah, but because together they are the market, that's the 23.
Yeah, exactly, 26, but you're right. Yeah, I wasn't that quick think about it, but you're 100% right. So all in all, it's interesting companies.
It's strange because they are together, they are the market.
They're the market, yeah.
And still they're not performing that good. That industry is not performing, and the outlook is also not that good.
No, because if you look at for instance, Airbnb, the high was 200 something, and it's still trading $50 below that. And there's no, and also here the deep was 85. So there's a lot of, it's pretty volatile. You can see that also in the chart. If you look at the chart, it's not a soft ride. And of course we had COVID in between, which affected those companies, of course, a lot and really a lot. And maybe they've still not completely recovered from that. I don't know how deep this went into their reserves, but all in all, it's a difficult sector. We talk about it because it was in the news. It's something that you have to bear in mind. If you still have those stocks, and you maybe it's some of those things. People after COVID, we've seen a lot of people stepping in this. This will go up afterwards. Be critical about these companies because you might see them still in your portfolio.
Yeah, and don't go only for about a jump of 6-7% on the figures. So you think, oh wow, everything is positive.
No, because I have here, for instance, with Airbnb, and you talked about cost. The cost to generate the revenue is increasing each time, so it's costing them much more effort to get to where they came. So be careful with them. 22nd of February we have Booking.com. Maybe they can surprise us positively. Be aware of that.
But beware of this industry, unfortunately.
We'll be back next week with some interesting company, something that you I think haven't heard of. So see you next week.
Thank you for watching. Give us your time.